Hello and welcome. It is August 1st, 2024, and this is your weekly Go No Go show. We're going to talk about what's trending. My name is Tyler Wood. I'm a CMT charter holder, and joining me, as always, the chief of charts, Alex Cole. How you doing, my friend?
I'm doing very well, thanks. Getting a bit warm today. We're going to have 97 degrees down here.
A lot of things heating up. Small caps, the weather. There's a lot to talk about, and let's hope we can cruise through this show before your air conditioning kicks off and you melt in front of the screen.
Absolutely.
As we always do, we like to take a top-down approach to financial market analysis. We're going to start with the asset classes. And what we're looking at on screen is just the absolute trend of each of these asset classes. We're using the GoNoGo Charts methodology, which combines a blend of technical analysis indicators to give us a sense of the overall trend. Just a reminder for those of you who are new here, the colors go like this. When we are in Go trends, or probabilistically in an upward trending environment, we're going to be in the blue or aqua forms of those GoNoGo colors. Blue being strong, aqua being our weaker form of a go trend. Amber bars are those neutral territories where all of the component indicators are in their neutral territory. That's when markets are indecisive about a directional trend bias. And then the no-go colors, pink for the weak form, purple for a strong form, no-go trend, moving decisively to the downside. So Alex, walk us through this heat map. Tell us what we're looking at across the global asset landscape.
Yeah, for sure. I mean, the top panel is equities, and you can see that we've entered a period of chop here over the last week or so. We were in a go trend. We saw a series of higher highs and higher lows, but we've been moving away from that last high. And most recently, we're seeing the amber go fish bars telling us that the market is a bit uncertain in the trend of equities. In the second panel, that's Treasury bond prices. They've returned to a go trend and are painting a stronger go bar, the bright blue. That's Treasury bond prices, of course. We're going to look at rates in a minute. And then in the third panel, we've got commodities. They fell out of the go trend and have been in a no-go now for a couple of weeks, painting weaker pink bars. And the dollar really for a couple of weeks has been struggling with direction, but hasn't had any go colors. So we've been going back and forth between the no-go pinks and purple and the amber go fish uncertain bars. And you can see that right now we've dipped back into those no-go colors for the dollar.
Absolutely. So from here, we'll dive into each of these asset classes. We'll look at a few intermarket relationships, but let's start with the major equity indices here in the United States. Starting with the S&P 500, we've entered a period here of increased volatility after perhaps investors were rewarded for simply having bullish behavior through most of 2024. Let's talk a little bit about what we're seeing in these amber bars, and in particular, what we're seeing from the momentum panel below the price action.
Yeah, you can see that things have changed. When we entered this go trend, we made the series of higher highs and higher lows. And then you can see that in the oscillator panel, we were finding support primarily at this zero line. So every time the price came back after these counter trend correction icons, we would look at the oscillator to see if momentum would stay on the side of the trend. And it did up until this more recent set of price bars. After this series of counter trend correction icons, we saw the trend weaken, and then we saw the oscillator break into negative territory. And of course, that shouldn't happen in a healthy go trend. So it's no surprise then that the trend indicator has started to struggle to stay painting go bars. We're seeing a lot of uncertainty. We're seeing these amber go fish bars coming in. And of course, what we're looking at now is a rejection of the oscillator by the zero line. So the oscillator moving back into negative territory, which is not a good sign for those looking for the go trend to come back.
Absolutely. Just another couple words on chart construction for new users of GoNoGo Charts. What we're looking at here in that lower price panel, for Alex and I, the most important aspects of technical analysis are defining trend, momentum. We're going to look at periods of volatility, compression, and expansion, and then also volume. And that fourth piece, volume, is reflected right in the momentum oscillator. When that line changes from green to dark blue, we're seeing heavy relative volume. So looking at the price action here at the index level, we're seeing volume pick up on downward moves. So heavy relative volume through this period of volatility. and counter trend correction at the very least.
Yeah.
The other point to make here is that when the momentum oscillator, when the GoNoGo oscillator gets stuck at the zero line, that neutral level, no directional momentum signal, we're building that GoNoGo squeeze. And if you're familiar with the great John Bollinger's work, Bollinger Bands or Keltner Bands, you know that from periods of compressed volatility often comes expanding volatility. And so for us, the build of that GoNoGo squeeze precedes what can be a higher velocity move in price action. We saw the GoNoGo squeeze build to a max at that point of trend reversal off those April lows. And then we saw another GoNoGo squeeze build at that moment of retest after we had entered the Go trend, finding support at zero, resuming the upward trend, resuming a momentum trend in the direction of the underlying price trend. That's what we're looking for as a sweet spot as trend followers. The last thing to point out are just the icons in the top panel. When you see those red arrows, those are indicating counter trend corrections. And we're using the momentum oscillator in its traditional sense when it's entered an area of overbought territory, 5 or 6, and it is cooling off from that overbought territory. That's when we're going to notice that price may struggle to move higher in the short term. So we're seeing a momentum cooling effect from an overbought level. That's a logical place if you were looking to trim positions in any security, maybe take advantage of other trends elsewhere. It's not a sell signal in absolute terms. Oftentimes, repeated counter trend corrections means we've got momentum that's resurging into overbought territory. In this instance, that clustering of counter trend correction icons preceded our more recent corrective activity in the price action.
Yep.
Alex, can we look at a couple of other U.S. equity indices? Let's jump over to the Russell, the small cap index. IWM is the ETF ticker for the Russell 2000. A lot of conversation amongst the analysts and peers in our technical community talking about the explosive moves in small caps. Tell us what you can see from this trend chart.
Yeah, it was interesting because the small caps didn't really match the trend of the S&P for what we saw for quite a length of time when the Go trend was in place for the S&P. But lately, as of late, it's really popped higher, and that's what people were talking about, that sort of recent explosion in the small caps. But if you look at it over the last couple of weeks, we've sort of struggled to do much in terms of furthering those price gains. We've moved mostly sideways. We made an intra-period high, but then we fell back below it to close. So this is a bit of a channel here. If you see these tops and the bottoms, maybe we're at a level that could provide some support. But what we will do is turn our eye to the oscillator panel like we were just talking about. We're seeing that we are in a go trend. We're still painting an aqua bar. And now we're going to watch to see if the oscillator finds support here at the zero line. It did once before, but will it do it again? And so you can see that also the volume that's come in on this recent price movement, or very relatively heavy volume, still continues today. So we're seeing heavy volume, we're seeing some volatility in price movement, but we're really going to want to see the oscillator hold the zero line and find support there if we're going to expect the trend to continue in the small caps.
So, of course, just from these last two charts, analysts can infer that we're seeing heavy volume outflows from the large cap index, the S&P 500. We're seeing heavy volume on price rising into the small cap index. There's obviously a lot of rotation going on. We're going to look at a couple of different heat maps and relative strength work to really unpack that story. But the other thing that we like to do, Alex, as responsible technical analysts, is look at things over multiple time periods.
Yeah.
Let's bounce this out to a weekly chart here for the Russell 2000. That recent move, just busting out and coming back to retest a very natural price behavior from the textbooks. Yeah.
Yeah, and this is a much cleaner chart because when you zoom out, you can see how these charts should work, just like all technical analysis, in different periods, different time frames in the same way. And so you can see that what we're looking for here on the weekly is the break into the Go trend, and then the Go trend remaining in place while the oscillator finds support at zero. And that's exactly what we're looking for, and that's exactly what we found. And you can see, Tyler, this period that you said, that the breakout and then the retest, that came as a breakout of a GoNoGo squeeze. So a max GoNoGo squeeze here as price moves sideways, that reduced volatility. When the price then jumped to new highs, that allows the momentum oscillator to get back into positive territory. So we can say there that momentum is resurgent in the direction of the underlying trend, which of course is a go. So yes, not a great day today and not a particularly strong week on the daily chart, but when you look at it in the context of the larger time frame, we are at new highs, and we'll be looking to see if we can consolidate at these levels.
Absolutely. Just for those interested in sort of some evergreen technical analysis content, right where your track mouse is, Alex, we're seeing the polarity principle in play. So those highs from July of last summer on this weekly chart of the Russell 2000, what was resistance has become support through that coiling move throughout most of 2024 for small caps, and then providing that support and really a launch pad for movements to new highs.
Yep.
Let's switch over to the Qs. The NASDAQ 100 is perhaps a little darker looking chart, less constructive than we saw in the small caps or in the S&P 500, a more diversified group of securities. Alex, talk to us about this no-go trend.
Yeah, and we'll talk a little bit later when we go through the sectors how we're seeing rotation out of tech. But I guess the question is which one of these is leading and which ones are going to catch up. And so what we can see here is that the Qs were in a strong go trend, series of higher highs and higher lows, oscillator finding support at zero, right? If you're new to the show, you should start to get the idea of how we read these charts. And what we're looking for here, when we saw this weakness in the go trend, we look at the zero line and we should hold at zero if the go trend is to continue. And of course, this time it didn't. We broke back below the zero line. Volume is heavy, and we entered the no-go trend. Like you said a few charts ago, Tyler, we can do the traditional volume analysis, and it can be really powerful. You're seeing this last movement up in price accompanied by relatively low volume, and then as we move lower, volume is relatively heavy. So that tells us something as well. And of course, then we move into a no-go trend. And again, you talked about polarity. So many of these concepts coming up here, but this is a level which probably going forward would act as resistance, and you can see that it did just that on today's bar. So the lows from this uptrend now becoming perhaps highs in this no-go move, and you can see the oscillator falling back into negative territory, further into negative territory.
Dear friend and CMT Association colleague Buff Dormeyer, who is probably the world's foremost expert in volume studies, asset flows. He talks about volume being thrust. If you were flying an airplane and pitching the nose up, you have to add thrust, otherwise your plane's going to stall out. And so it's a kind of a helpful analogy to me when thinking about volume as the fuel for the market. You can see that that final high in the NASDAQ 100 running out of volume as we reach those penultimate highs. And that indeed looks like a plane that stalled out, needed to level off a little bit before we could make another run. So heavy volume, no-go trend, up against what had been support, now resistance, and a pretty strong day to the downside here for the Qs. Alex, let's switch gears away from the equities. Let's talk about perhaps the hottest ticket in town this week was Jerome Powell's discussion about what the Fed is planning to do next. Certainly holding rates steady for right now, but much clearer language around the anticipation of rate cuts coming our way. Let's talk about, instead of the narrative and the language that was used, let's look at what's actually happening in the 10-year Treasury yields here on this chart of the TNX.
Yeah, I mean, and what's actually happening is a no-go trend. You can see we've been making a series of lower highs and lower lows. And of course, over this week, we've been already at new lows. And then, of course, today just takes us further lower. And you can see how the oscillator has stayed mostly below zero during that time. You can see it was turned away from the zero line on the last sort of relief rally when we saw these pink bars. And again, those icons on the chart really draw our eye to something happening that is significant. And every time the oscillator gets turned back into negative territory, when a no-go trend is in place, we get these red circles. And these red circles tell us that we're likely to see trend continuation to the downside, right? These are no-go trend continuation icons. So when we saw that 3 days ago, as we test these previous lows, no surprise then that we're making new lows now with the oscillator racing into extremely oversold territory. So very, very sort of bearish chart looking at the rates in this strong no-go.
Yeah, and amongst our institutional clients, the long short equity fund managers are looking for those ways to lean into shorts. Obviously, not everybody's cup of tea. I know we have got a lot of long only investors watching this show, but if you are trading to the short side, covering your shorts when that momentum indicator is pulling back above the neutral zero line, that's logical risk management. Leaning into shorts where you see those trend continuation icons also makes a great deal of sense. Alex, let's pop this out to a weekly basis as well for a little more context. Here we are at the very start of August, and rates over the long term certainly elevated, but there's a lot of evidence that the next period in this cycle will be to the downside. Talk to us a little bit about this longer term view on the 10-year.
Yeah, we've been talking about rates for a while as being elevated, but not racing away in any direction. And that's sort of been a fairly good thing. That stability has been a fairly good thing, perhaps, for the equity markets. What we're looking at now is, for the first time in a few months, our consecutive no-go bars. So this week, painting another no-go bar towards the lows of this most recent range, and the oscillator now much further into negative territory. So the weight of the evidence now suggesting further movement to the downside on this longer term chart.
Absolutely. All right, let's take a look at a couple of other commodities charts and how they might be playing out in our equities. Let's take a look at gold.
Yeah, gold's an exciting one. We've been talking about this for, it feels like years, right? With the decade plus long cup and handle pattern that we broke out of way back when now. But you can see that we haven't really been able to get off to the races in terms of higher highs since that initial run. We've been sort of stuck in this sort of channel, but creeping higher. And what's good to see is that we found support a little higher than we had previously. The go trend didn't give way this time to no-go colors. And now we're seeing the trend strengthen again, and we're seeing trend continuation as we see the oscillator getting back into positive territory. So we're a little bit more advanced than we've been before, and we're going to test these levels. You can see that we're right at those levels from prior highs, and we'll be looking to see if we can make a new high with gold.
Absolutely. Let's take a look at oil prices for a second. And again, on the GoNoGo show, we use a lot of ETF proxies, get a sense of volume that's trading behind these instruments. Spot gold price, spot crude price are going to look slightly different for those of you who are trading futures directly. But for our purposes, this is a pretty good look at what's been happening in the oil markets.
Yeah, and oil wasn't able to make new highs. This is, very, very standard traditional technical analysis. We weren't able to make new highs. We saw resistance here at these prior high levels, and then price rolled over, and we're now painting no-go bars. You can see the same kind of, if we zoom into this sort of section of the chart, you can see that we had a max go-no-go squeeze playing out as price struggled to go higher. And then that break to the downside here, a couple of bars ahead of the change in trend, told us that this go trend was not healthy. And so negative momentum, currently painting no-go bars. Yes, a lot of uncertainty, but amber and no-go colors as the oscillator is in negative territory.
Yeah, hopefully folks are taking a little bit of market analysis as well as some trading rules and responsible practices from these shows. When we see a max go-no-go squeeze, we're paying attention to the direction of the break as a leading indicator of what is to come in price action. Momentum leads price, and so we're paying very close attention. Obviously, volume picking up to the downside and a break of a max squeeze, all very, very destructive characteristics for a price chart. Yep. Here on U.S. oil. Let's take a gander at the U.S. dollar. We use UUP as a ETF proxy for the dollar index. Talk to us a little bit about the currency environment here, Alex.
Yeah, real inflection point here, Tyler, because we have been sort of in and out of a no-go trend, struggling really to go in either direction. over the last several weeks, and that then is played out in this lower panel. We are currently in a max go-no-go squeeze. So you were just talking about the importance of that, and we're seeing that here on the dollar as well. So in a bit of a range on the daily chart, you can see that we did manage to go higher briefly, but not able to hold the go trend as the oscillator went negative. And now you can see an extended period of tug of war, really, between buyers and sellers. Very little directional pull when we see the oscillator here riding the zero line for this length of time. So it'll be, as you said on the chart previously, it'll be important to note the resolution of this go-no-go squeeze. Will it roll over back into negative territory, in which case we're likely to see the no-go continue, or will we break higher? And then, of course, we could see another change in trend in the price panel.
Absolutely. And let's back this one out to a weekly view as well.
Yeah, the weekly is very interesting here because it paints a different picture. The weekly trend is a go, and we're seeing that series of higher highs and higher lows. Now, the sort of extent of those higher highs and higher lows has been sort of compressing a little bit. You might see that we aren't getting much higher, but we are still setting higher highs and slightly higher lows. But that inflection point still here on the weekly chart as well, with now a second week with the zero line being tested. So we're going to see if this go-no-go squeeze will continue to build, or will we move away from zero by the end of this week. So definitely an inflection point on the weekly as well.
Absolutely. So quick recap, rates are falling. We have stability, if not slight weakness in the US dollar. We've seen price of oil contracting and sliding downward. Fairly favorable environment for risk assets broadly and for the equities markets. So I know we started this show delivering some weakness at the index level for the S&P 500, proper no-go trends in the Nasdaq 100. A little different story in small caps. Let's turn our eye back to the equity markets and let's just look stylistically, Alex, for portfolio managers out there who want to get a sense of large cap versus small cap, growth versus value. These 9 style boxes help us get a picture of what's working right now on a relative basis. So this is a heat map that's looking at those style boxes relative to the S&P 500. We're looking at large cap equities in the top 3 panels. We're looking at a blend of large and small, or excuse me, mid cap securities in the next 3 panels. We're looking at small caps in the bottom 3 panels, with value, a blend, or growth in the 3 categories. So, Alex, talk to us a little bit about this heat map. We've seen quite a bit of rotation through the end of July as we enter August. A lot of different styles working out with respect to the S&P 500.
Yeah, that's what I was going to point out. Remember, these are relative to the S&P 500. So the top panel of each of those 3 blocks that you talked about are the value style. And so it goes value, blend, and growth. And you can see that in the large cap relative to the S&P, large cap still doing relatively well. You can see then, though, that it is these sort of large cap value and small cap sort of little bit sort of veering off the path there and painting the no-go trends. So for people that are looking for the styles, this can be really, really useful. But as long as we remember that it's relative to the S&P, which is weakening itself. So quite a lot of strength here when looking at these styles relative to the S&P.
Absolutely. The other way that we like to slice and dice things, because we know it is a market of stocks, not a stock market, and what's happening at the index level might be worth a glance. But if we're looking to be responsible investors, we've got to get under that hood. We've got to look at what is working on a relative basis to find our areas of opportunity for long ideas. Have to look at what's dragging the market down, and perhaps even build a list of short ideas. So here we're looking at the S&P 500 sector rel map, and this is each of the 11 sector spider ETFs relative to the S&P. And my goodness, what a clear picture of a rapid rotation out of very narrow leadership from the XLK, a little contribution from discretionary there in July, to what we're looking at right now as we're entering August. And it's basically everything else is working except for those mega cap growth names, the technology and communication sector.
Yeah, and everything else working, but remember, working relative to the S&P. So that doesn't mean to say all of these are screaming after new highs in Go trends. And you can see quite exciting moment in the top panel there. We've actually entered a no-go on the S&P itself. So you can see how this color will change throughout the day as price is updating. And of course, once closing price is in, then it will not repaint. But we've actually, if we close where we are right now, we'll be in a first no-go bar for the S&P. And like you said, you really would be leaning into short ideas if you're looking in the technology sector, and the rest of the market really trying its best to sort of prop it up.
Absolutely. Great note about chart construction. We never restate or recolor bars after the period has closed, but the longer the time frame of chart you're looking at, that final bar is still in play until the period closes. So if you're looking at daily charts, here we are midday on Thursday, August 1st. That bar is still in play, and yes, it has just switched to a no-go. Alex, let's go back to a basic go-no-go chart. Let's just go through these sector ETFs. We'll look at their absolute trend and their price action, starting with the XLK, just to get a view of what's been happening under the hood on an absolute basis.
Yeah, absolutely. This is the XLK, and you can see it really sort of fell off a cliff after setting that new higher high. We didn't even take a bar to test the zero line, straight through it. And that was really telling. We had a few more bars of weakness in the go-no-go trend indicator, but then straight into a no-go. Not even any uncertain amber bars as a transition, straight into the no-go, strong no-go. And now, of course, we're testing lows, looking to set new lows as the oscillator is in negative territory on heavy volume.
Yeah, it looks fairly similar to the Qs and,
Yeah,
and constructed of many of the same names. Let's take a look at the XLY, the consumer discretionary sector.
Yeah, discretionary is trying to hold on, like you said. It was sort of trying to continue to hold on to that go trend on a relative basis in the sector map. But you can see, again, real struggles. We gap lower. We painted some amber bars. And then the go trend tried to recover. This is also a great teaching moment, Tyler, just because look at the way that gap provided resistance. So we gapped lower and then really couldn't get out of the top of that gap. I mean, that's very, very clean the way that we were rejected at that level. And then, of course, that lines up with our method of looking at things. And we see the oscillator rejected at the zero line on that same bar. So that's become a very significant level of resistance.
Absolutely. And let's take a look at the XLC, the communications sector.
Yeah, communications. What an interesting bar today. You know, like that's why you always say, and it's a great point to make, that it is a market of stocks, not a stock market, where you could also say it's, you know, the sectors as well will behave the way they want to behave. I mean, what an interesting day today. I mean, we almost took out these prior highs. And now look where we are. So very interesting day today. But if you put our go-no-go perspective on this, we still can say we haven't got out of these amber bars. We aren't painting a go bar, even though we opened so high this morning. And so we're in the no-go. We enter a period of uncertainty. If we turn our eye down here to the oscillator panel, we are testing the zero line from below. So if we get rejected here, more likely than not, this will become more pressure to the downside rather than an attack on these prior highs, which should look possible this morning.
Absolutely. And let's take a look at the energy sector, the XLE.
Yeah, energy choppy. We actually put out some notes this morning about some ideas in the energy space, because relatively speaking, this is outperformance, right, compared to what we're seeing on some of these other sectors and the S&P as a whole. So uncertainty, amber go fish bar. But look at the difference. Look where the oscillator is. It's not below testing the zero line. It's above testing the zero line. So we're coming out of a no-go move. Now we're looking at a mix of go bars with amber bars and the oscillator testing the zero line from above. So this is a different picture. And if we can hold the support here, then this might be a slightly higher low. So a little different picture there for energy.
Absolutely. And let's take a look at financials. Bull markets in the United States have not have not survived long without participation from the financials. And there's a lot of excitement amongst many analysts and investors about this new fresh life of rotation coming into the financial sector of the market. Talk to us about this trend.
Yeah, absolutely. And it really is it's a different picture. People say, well, you can't pick stocks or everything trades the same. And you can see that that's not the case. We've made new highs. You can see that there should be support at the levels here from these prior highs earlier in the summer. And again, go trend in place. Yes, today is a bad day across the board, but we're still painting go colors and the oscillator testing the zero line from above. And we've got some potential support here from prior lows. Again, the concept of polarity saying that these should be support going forward where they were resistance.
Absolutely. And let's take a look at industrials, XLI.
Industrials, again, same thing. We are at levels that were resistance. We certainly would want to hold around here and consolidate above those levels. But again, go trend in place, oscillator above zero and finding support repeatedly. So we'll need to see that continue. But interesting that the volume has come in at these more elevated levels. So another slightly different picture for industrials.
And there are no seasonality or cycles factors built into any of the algorithms behind GoNoGo Charts. Yeah. But it's something that we obviously take a look at as you enter August, which is historically one of the weaker months of equity performance here in the US. A lot of anticipation for a return to a more volatile market, and we're seeing that just in the size of the candles of daily price action and the fact that we're seeing so much rotation. But let's keep going. We'll get through these sectors. Materials is next, the XLB.
Yeah, not surprisingly, materials a little bit closely mirroring what we just saw in industrials, but not quite as elevated. So we're in sort of this choppy range. We are seeing go bars oscillator at zero, testing that level again, but certainly not down threatening lows at all yet on materials.
Absolutely. And moving on, let's look at healthcare, XLV.
Yeah, here you go. Here's one that looks all right.
Exactly.
So, you've got to keep looking, right? What do we say about the Jimmy Buffett song? It's 5 o'clock somewhere. Well, there's a trend somewhere. And at the moment, healthcare is making a series of higher highs and a series of higher lows. And even today, look at a sector that is up today, right? That's significant. So something that is up today, that's quite telling. And of course, oscillator finding support at zero and heavy volume on this latest move higher.
Yeah, exactly 1 month ago, Alex, got to join Interactive Brokers on a podcast, mid-year review. So much commentary, questions about the narrowness of breadth, the weakness of breadth, the narrow leadership of the markets, the fact that semiconductors may have been fully overblown, and does that mean that's the end of an AI bubble? And so there's nothing prescient about what I shared, but simply leaning on the technical analysis toolkit, having some understanding of history and what the multiples were like in the late 1990s when we had a proper tech bubble. There was still another 25% to move in the relative of the XLK to the S&P 500. We can also see that the equal weight view of the S&P 500, so removing the cap weighting component, we saw much less of that bull market activity, but still a very constructive view for the average stock in the index. And this has just been a season of great reminder here through the month of July, and as we enter August, that it is a market of stocks, and there are alternate opportunities. When you start to see that rotation, it's not just the Magnificent Seven that investors want to pay attention to, but lots of other opportunities, and perhaps a scenario where you have this stealth bull market under the hood. That at the index level, we're not seeing a whole lot of new gains, but we're seeing a lot of those smaller cap names, different sectors, the cyclical areas of the marketplace catching up to what had been a mega cap led rally at the index level. I know I keep interrupting you. Let's finish this exercise as we.
And the thought is that when that happens, then we can go again. Right now, we've got more broad leadership, and perhaps we'll have a good end to the year. So
yeah, a deep bench is often what helps win championships, right?
yeah.
So beyond healthcare, let's take a look at consumer staples, the XLP.
Yeah, I mean, and this makes sense, right? When you've got a rotation out of technology and out of the growth sectors, the more defensive sectors will be relatively performing quite well, and we can see that we are still creeping slowly higher. We've had a higher high, we're having higher lows here. Oscillator generally finding support at zero. I mean, this looks a little tenuous to me. We haven't really been able to move very far away from zero in the past couple of months, so not a lot of momentum in either direction. But the sort of overwhelming feeling is that we are moving slowly higher, and the go trend remains in place with the oscillator finding support at zero.
Absolutely. And let's take a look at utilities. Early on this summer, we saw that barbell approach of technology and utilities both leading us tremendously higher as we all consume tons of electricity running our air conditioners. Talk to us about this chart of the XLU.
Yeah, this is a cleaner looking chart. I mean, this is quite nice. We saw a really strong move in utilities, like you said, for much of the same period that we saw strength in tech. As it came off from the highs after this counter trend correction arrow, we look at the zero line. Zero line didn't hold. That told us that this correction might be a bit more drawn out. And of course, we then went into a no-go trend. But it didn't really last. And you can see that the oscillator told us that by getting back above zero here on these amber bars. And then quickly back into a go trend and repeated support at zero. And now this one is really actually taking off. So we're seeing a strong move in utilities, consecutive strong blue bars, of course, coming out of the cluster of continuation icons, telling us that momentum is resurgent in the direction of this underlying go trend. And today and yesterday, new highs, right? So closes at above new highs. So look, going forward, we may well find this area to be support if we do pull back.
As Joe Pesci has once said, don't pass judgment on the Utes before you get to hear their whole story, right? You never watched My Cousin Vinny? It's one of my favorite movies. Last one, the real estate, XLRE, which may or may not be up for debate as a sector of the S&P 500. Talk to us about this trend here, Alex.
Yeah, it's one of the 10 sectors, or not. But or not. You know what? It's in there as the 11th. So yeah. So here you go. This is the 11th of the sectors, and a strong. This one looks great. Strong go trend. Just right now making higher highs. And like to go back to the traditional understanding of volume. Look at the volume here as we move sideways in very narrow range. No volume, relatively speaking. We see the max GoNoGo squeeze break, but momentum continue now to hold the zero line. But then look at the volume pick up. On this gap higher, we see relative volume increase, and it's been now relatively higher for this run. So market definitely participating in higher prices for the real estate sector.
Beautiful. I know we could chat all afternoon going through tons of individual securities, but as our first show back, as the summer starts to wind down and we come into the fall, really wanted to thank everybody for checking out this show on the GoNoGo Charts YouTube channel. Make sure you like and subscribe and all those things that the kids do on social media. I also wanted to just say for Stock Charts users and viewers, we have recorded a nice little piece teaching you how to use the scanning and screening tools. You'll see every Friday afternoon a report from us just pulling out those names with relatively high volume and a strong momentum signal to their trend. Amongst all of our screening and scanning work that we do each week, lots of new names, fresh faces in the leadership groups, so keep an eye out for that. And as always, take care of each other and trade them well. We'll see you next week. Cheers.